Happy Friday, everyone. We're going to see how the market is shaping up in the pre-market hours. And then I want to answer a bigger question. This one coming from my friend Kiko over at the Discord, available through the Patreon. That link's down in the description. Asking, what do I see coming up for the markets, like in longer term? What exactly can we expect? Is there a drop coming soon? We need to take a look to see what the charts are suggesting. And there's one chart that I keep coming back to that I just want to reiterate. I've talked about it months ago on my channel, and I'm going to bring it up again because I think it's a very timely time to really look at that. So this is our last full week of September that we're closing out here. Next week, we get to hit October, the last full month that we have prior to the election, which could be that sort of catalyst that helps us have that volatility in the markets that could soon come to us. So let's put this up here. Here's SPY, and you can see in the pre-market hours, let me make this even better so that you can see it. 571.02, we found that as support. This trend line, as I mentioned in yesterday's video, it's absolutely critical that we get up above that. Watch for a potential rejection to come off of that one. This could be a day where we try and find out again where the floor is. If that floor holds up, then we can see more room to the upside. But that trend line, breaking that, is going to be one of the really big things that we have that enables us to get up to some of these higher price targets that we have up here. By the way, in some of my analyses this morning, 581 to 591 is actually a really critical range for us. Anything really in there, we should most definitely be watchful for in the longer term. So we're not too far off of that right now, being in the pre-market hours that were at 573. So the next $8 to $18 in SPY is just going to be absolutely critical for watching for what can happen around those values. So let's pop out of there over to the Qs and see what's going on here with the NASDAQ 100 ETF. And we have 491.89. We were up above it yesterday, treated it as support, market open, and just plummeted, came back down to support down here right around 487. And since that time has been floating back up. We need to watch that 491. That's going to be huge for us. And then 502 up above that is also equally important should we travel to the upside on this one. So moving over into IWM, we can see in here that we're in this support area. We kind of tumbled out of it a little bit, not ready to call that resistance yet, but up above here, most definitely still resistance. If we fall out of this thing completely and hit our heads off the bottom of it, I'm going to call that resistance instead of support. In the pre-market hours, nearing $221 per share. If we're able to stay up above that, we could see 224 come out of it. 222 is pretty significant resistance for us. However, 224, 225, be watchful for those for if we continue to the upside. If not, we have about 217 all the way down to about 215, 216 to be watchful for. So over to Nvidia. How's Nvidia shaping up in the pre-market hours? Man, it is right below resistance at 124.50. That trend line across the top, as I mentioned with SPY, got to break that trend line. We want to see that price push up to about that 131 that we have up here. Got to break resistance, got to break that trend line in order to do it. If not, we can start looking at the support levels that we have on here of about 121 down to about 118 before we hit the area of support that's lower here on the chart. Over to Tesla. Tesla found itself in this free rise area, made it, and then hit resistance, fell back down, found a support area again. And now we'll see, you can actually see right across here, around where the prices are, that something interesting is going on there. I could put on more and more of these supports and resistances, but eventually it starts to get so much noise that it becomes sort of unusable to watch and see what's happening. RSI on an hourly basis, looking strong so far. We'll see what Tesla gives us. Watch out if we make it back up here to about 263. Watch for a double peak to happen. We do have full self-driving and robotaxi day coming up on October the 10th. Tesla could stay strong up until that point in time, especially if the market does hold out until that point in time. And then I expect a larger sell the news event to happen to us, especially if we're able to get up to the top of this resistance right around at 268. That's going to be absolutely critical for us in terms of resistance should we make it up there leading up to that day. And if we make it up above there too, you guys can see up here 276, and then up above that is 282. Anything up in that area, I think it only increases the amount of selling that we're going to get as we reach that robo-taxi day. And we would have to hear something incredible and surprising come out of that to sell the news going into it and really rally coming back out of it. So maybe Elon does have something incredible for us that we don't already expect. And I think he's already done a fair amount to hype it so far. So we'll happen to see if that hype holds out through the announcement. I think there will be a sell the news moment. And then I think that there is potential to see that rise, but we're going to have to see what Tesla has to say for us, what Elon has to say for us during that event. That could be the next catalyst that we're watching for. BTC, as we look at this one, we haven't made up to the 67, almost 67, 696 is what I have. There's some interesting resistance right around the 66s, so low 66s. Be on the look for that, out for that. And I haven't marked on my chart, but there's only so much noise the charts can tolerate. We have, importantly, broken up above the 200, which is down here, negatively sloped at the moment, but we're up above it. That's a bullish thing. Maybe we get a golden cross coming out of Bitcoin. We're going to have to watch and see. Down here in blue is the 50-day that we're watching for that. We also have this trend line to contend with. If we're able to make it up there, 68,336 is also a really critical resistance for us. So I think this is going to be a tough zone to break should we make it up here. And we have the momentum to do it. We'll see if it can hold out for us. So I think that there's further upside for Bitcoin. And these levels that you see in here are going to serve as decent support for us. Should we head on the way back down? I'm going to flip this one over to red because it is a price drop at this point in time now that support has solid, resistance has solid been broken and turned into support. All right, so now for the part that I really wanted to talk about here. So longer term outlook, not just what's going on for today, what's going on in the near future, but what can we look at in a longer term for the S&P? Well, we actually, once again, are at a really, really critical time in the charts. And I think that I can really make this clear for you. So I've actually provided a clean chart with just a very few technicals on it, just about the essentials of what we would want to see. As a matter of fact, I can do a little bit more. Let me take away the volume. And that way we just have the charts on here with just the candles and just the RSI. So candles, RSI, and then I also have two trend lines on here that I want you to see. So let me put this up. So this is the S&P, and actually right about here. So this goes back to January 2018. This was peak momentum for us where we were massively overbought in the S&P, and we actually tumbled down a little bit. And now, mind you, I say a little bit, and this is a monthly chart that we're looking at. So we actually had for the month of January over a 5.5% rise. And then when we move over to what we had for February following that, we had a 3 to almost 4% drop, and then that followed by another almost 3% drop. So a little bit of ugliness to follow that massive peak that we got off of that. And then we hit down here back to nearly out of overbought territory, rose back up out of this. And then when we actually came over into October of 2018, we actually set a lower peak on the RSI, and a much bigger drop had come from that. So when we're looking at these peaks, that's actually a really decent interpretation. And I've made this point before that when we're looking at the RSI, we can kind of treat it a little bit like we would for the candles with the whole lower highs, higher lows, setting up some sort of confirmation. Well, this is a momentum confirmation if you want to think about it that way. When we look at these, so let's move forward from there. We're going to go up to 2021 and look at what happened to the RSI. And again, I made a video on this before, but I want to keep coming back to it because this is exactly what I'm looking for to talk about when potentially that next big drop comes for us. So you can see the rise that we had up into overbought territory. Once again, a lower high than what we had in 2018. Now, we were rising up at that time, came back almost out of overbought status, popped back up. You can see we had a little bit of a red candle in there. And then that peak that we made, a little bit lower for us. However, we also didn't have a lower low on that. And then the next peak that we got was confirmed in January of 2022. So we have a lower peak than what we had for this big one previous to that. And then what really sealed the deal for us was when we broke below this previous low that we had right here as well on November of 2021. So when we actually came down into January of 2022, that signaled the momentum drop that we saw throughout 2022. So as we look at this, and you can use this reading it back the other way. So this low that we got in September on a momentum basis, when we move over from that up into October, yeah, we were heading back up. We had about an even peak here in November, and then in December, a low, and then it was January that actually confirmed a higher low on that. That actually gave us a fair amount of hope, but you'll notice that we didn't break up above this thing price-wise until we actually had, it was over here all the way in May of 2023 when our momentum really started to move up above these previous peaks. So we were getting higher highs and higher lows on a momentum basis, and the market just ripped up until what we saw throughout 2023. A little bit of trouble in here for what was going to happen from the Fed. Until that time, then we bottomed out again, and then we were back off to the races until the present day that we find ourselves in September. Now we're back in overbought status. Now right now we don't have a lower peak, we have a higher peak, and we also don't have a lower low. So right now we don't have a confirmation, I don't think, of some massive rip down in the prices in the market. I just don't think that we have that. And we're also lacking any sort of catalyst that changes this direction at the moment. And that doesn't mean in the next month, in October as it comes up, that we're not going to have a red candle month, because that can happen. I'm talking more about the bigger drawdowns that we can see. So just from an RSI standpoint and what we see price action wise from what's here on the SPY, this trend line prices are generally going up. This trend line here is that we have that momentum drop happening for us. That's bearish divergence coming in, and this can last for a while before we get any sort of massive price drop. But I think that when we do have that catalyst, whatever it is that happens in the future, I think there's going to be a pretty significant drawdown that happens for us, and then we're looking for when that next time comes in. So from an RSI standpoint, we don't have that lower peak yet, and we also don't have that lower valley yet. When we do get those two things, we can expect a bigger sell to follow. So at least from a technical standpoint, from an RSI standpoint, I think that that's a really good way to look at it. We're looking at those triggersome actions that can happen to us. The thing is about being up here, that if we do have a triggering event that triggers a sell, we could pull off significantly or pull back significantly from that value. And then where we can pull back to goes back to the levels that I've shared on the previous chart for SPY. And if I put the moving averages back up here, there we go. So what we see in green is actually the 5-period simple moving average. So 5 months at a time, the 13 down below that, and then down below that is where we have the 50. And if I put up these instead and actually take away those exponential moving averages, I think this is a really good view. We could see that return back to the 20-period moving average. If we want to know how many candles go back 20, we can go like this, and 20 bars actually takes us back to where we're at here in green. And so as these candles fall off, this moving average is actually going to move up on us towards this trend line that I have drawn on here for you. So that's going to keep on peaking into October. October would have to actually go pretty low, but I'd have to go down below these previous candles in order to make this actually start to really drag on it. Instead, it's going to pull up on it anyway, generally speaking, from where it's at right now. So the 20 period is going to move up, and the 50 is likely going to also move up. The 200 is going to steadily move up on this thing. And so we could come down and have those prices meet possibly around this trend line, maybe a little bit down below it. We're going to have to look for the peaks that are on here. So what do I see coming up for the SPY? Really, at any moment, we could have that catalyst that turns things back around for us, that we start to look for where we can find that massive support. Maybe it's the election coming our way. Maybe it's non-farm payrolls. Maybe it's the unemployment rate. Maybe it's further indications of recession that we have out there. Maybe it's geopolitical. The market isn't really waiting for that catalyst to come along, but the market is ready that should that negative catalyst happen that drags on the market, we're probably going to rip down pretty quickly and give back a couple percent in SPY over the months that follow that. Maybe a little bit at first. We're going to have to see if it's something that would be a longer, more sustainable drawdown, and the RSI might happen to help us see that. So guys, that's what I have for you for this video, and sorry for flipping over to the charts there for a moment. If you guys want to hear more of my commentary, if you want to talk to me and my community members, if you want to see my technicals before they hit YouTube, you want to see my buys and sells as well, those are all available at the Discord, available through the Patreon, which that is linked down in the description. If you guys want to learn to do this technical analysis yourself and really empower your trading that you do, you can do that through Stockmo Academy. There's a link for that down in the description. Stockmo hooked me up with a link for that. You can click on that, sign up. You can learn about the bread recipe that he and I both personally use to help out our trading, to help signal buying, selling. Now, mind you, we don't tell you when to buy or sell. The bread recipe itself doesn't tell you when to buy or sell, but it does signal for when there could be a significant price appreciation or significant price drops in the near term and make those things tradable for you. So you guys can check that out. I have a coupon code DOCTOR down in the description. You can click on that, sign up for the course, get that discount using that code, and then learn all about technical analysis, learn how to set up the bread recipe, learn how to read it, learn how to use it for that trading. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.